World Economic Outlook update. They do it twice a year in April and October. And they do a bit of a preview of what the speech from the managing director of the IMF and how they're seeing the world. In her comments, to sum up how they're seeing the world economy today is our forecasts point to an unforgiving combination of low growth and high debt, a difficult future. So let's take a look at the forecasts and the remedies. And I'll start with the good news. Obviously, inflation, after peaking back in 22, has come down pretty quickly around the world. This is a survey of the sample of 57 economies. So it has come down quite a bit and come down pretty rapidly, but it has been stubborn. The problem with inflation like this is, well, the inflation numbers come down, cost of living still remains high. But we've done this with inflation coming down, labor markets easing, but not a recession. This is the US and Euro area. And you can see in both cases, we've managed through this pretty well with not a lot of challenges, although I would say the challenges are still to come. And the challenge has been masked by the massive fiscal and monetary support on the system. But when you've had a period like we've had of higher prices, it's the poorest that get impacted the most. And this chart is really fascinating because today the BRIC nations, or the BRIC plus nations, are meeting as well. And they're trying to figure out their role in how they, move away from the dollar more, weaken the US's impact. This is being led primarily by Russia and China. And then they're also dealing with this problem of they have really high price increases in a lot of these, the global South and emerging markets. And the advanced economies still had high increases, but we're still getting a little bit more income for a dollar. And I think this is one of the challenges that the world has to deal with, is this inequality of outcomes is a problem, but where the talent is, where the populations are mismatches here. So keep this chart in mind as we move forward. So as we just heard it from Francis about China, I think you summed up what it is for the world, Francis. There are pockets of really good opportunity and pockets of major problems. What you can see from this chart is India and China's contribution in the orange, US in the red, EU in the blue. And what you can see here is as we move forward into 27, there'll be some greater growth from those areas. The EU's coming in a little bit, US a little bit, and India and China still continue to pick up. The problem is this level of growth for the world will not be enough to address the debt servicing issues that we have, the job and reskilling needs that we have, climate change issues, and other investment needs that governments are going to have. And I think you're going to find that those who have the money to do it are not doing it enough, and those that don't have the money can't afford to do it. And it's going to be very hard to get past some of the problems without dealing with some fundamental issues. I think one of the big focuses from the IMF is going to be about debt levels. One of the challenges is that we are likely going to end up with post-pandemic, with debt levels higher than we went into the pandemic at. And this is creating a crowding out and also creating bigger haves and have-nots. One of the biggest problems, though, is while there's about, say, 100 nations that they have in this survey for this, 2/3 of them will have lower debt to GDP ratios in the out years. But the 1/3 that don't represent about 60% of the economy and about 50% of the world's population. So they're going to be struggling with crowding out of costs. And this is the problem where it comes in. And you can see what this means from the chart I showed earlier about the rising prices without the rising incomes. This is in the orange again is the emerging middle market economies ex-China. And then it's really the low-income economies. The low-income economies have seen their net interest to government revenue go up threefold, and it doubled in the emerging economies. And that is really a problem when you have big spending needs for the population, and so much of your revenue is going to interest costs. It becomes a very non-productive spend. And if we have a backup in rates like we've seen in the last month or so, if that continues, then that puts even greater strains on the system and makes it harder for people to get out of it. Furthering the challenge is national security concerns, which are diverting money away from those social spending needs that exist and will continue to exist well out. And look at the rise in military spending and what it means, and look at the slow growth of official government development assistance. And this is after a period of really aggressive government assistance going out into the system. And then the last thing that's really gumming up the works a bit is the change that we've had in global trade. And you can see from the chart here, really starting with the Trump administration in 2016, then the war in Ukraine, the pandemic, and then the war in Ukraine, that started to really change the terms of trade. And the sanctions that were really put on Russia after that have woken up the rest of the world, particularly adversaries to the West, to move away as much as they can from the dollar. And that's going to be a big theme at the BRIC meeting this week. It's harder to do than it is to say, particularly when you're relying on autocratic leaders with not as much respect for the rule of law as you might see in other areas. So I think this is one of the big things. So these are interventions that will slow growth and lead to higher prices around the world if they're not managed effectively. And then there's a saying that the truth will set you free, but not necessarily in politics, because the truth is leaders have to say we need more restraint. We can't keep spending the way we're spending. The debt's too high, the interest costs are too high, and the giveaways are too high. But that's not the discourse that we're seeing today. This is particularly true with so many elections going on around the world, but you're seeing this a lot in the West with the US in particular. Our two candidates, there is no giveaway that's not good enough for them right now. That is leading to a problem where we're losing sight of the fact that fiscal restraint is important. There's a book out called Austerity that I haven't gotten through yet, but the gist of it is my understanding is that while there's a lot of focus on tax increases and spending cuts, they feel that the best outcome is through spending cuts. There's a lot of people who will say that's not the case. I believe it's probably a balance of the two that's going to be required to deal with this, to get through the problem. But the leaders are not telling the people what they need to hear. They're telling them what they want to hear. And the bill's going to come due down the road. I call this setting the bill to the kids' table. Another problem that we have is demographics are killing major economies. And if you look at this chart, the leading economies are well below replacement level. The emerging economies are well above, yet the capital flows to the leading economies and very few financial centers and is flowing away from here. Talent pulls away from those in the red and those in the gray and starts moving to where there's better opportunities, furthering their problem in those emerging and low-income economies. So you have these demographics working against many nations. On the other hand, you have some developed nations that their immigration policies are such or their domestic policies are such that they're too little too late on getting their population growth where it needs to be. But this is a major problem, and it leads to this issue, which is you need productivity to offset the debt and demographic challenges. Paul Krugman, a pretty well-known economist, has said productivity isn't everything, but in the long run, it's almost everything. And I think that's particularly true when you think about the foundation of GDP growth comes from population growing and productivity growing. And if we're having population declines, productivity is going to have to step in, particularly in the absence of sound immigration policies. So I think this is really some of the makeup that the IMF is seeing in the world today. I think the conflicts that we have are creating bigger challenges to solving the problems that exist. So their recipe for getting back on track is pretty straightforward. Gradually reduce debt and rebuild the buffers, prepare for the next crisis that's coming. Focus on getting capital to where it needs to be. Getting a better marriage of capital to opportunity. This has been a long-term problem for the emerging economies. I don't know how we do it in the current geopolitical environment to do it effectively. I think the US took a shot at that and mismanaged it. I think the Belt and Road may turn out to be a similar mismanagement of it, as both US and China try and woo the areas where the population growth is and where there's some development opportunities like the Africa and other emerging economies. But I think it's going to be very difficult to get capital there because of corruption. They've historically had higher growth rates, and those higher growth rates have not translated into better economic outcomes. I think it's due to unproductive spend of the capital and misuse of the growth, and that's a problem. So to enhance productivity globally, I think we have to do a couple of things. I think improving governance, particularly in those we were talking about in Bangladesh, where corruption is so high, it's hard to move past. I think you have to reduce red tape. I think the idea of generative AI being a game changer is real, but there's a lot that goes into that could lead to some big problems, as well as corruption of power, as well as great opportunities. And I think we need much more productive and efficient spending on education and research and development. And to do that, you need more consistent policies, and you need to have, in the US in particular, to be able to move past every 2-year election cycles to understand what the policies are to make your longer term investments. And finally, from my perspective, I think the IMF would agree that we need the leading countries that are adversaries right now to dial down the conflict and focus on the big problems together, because if we don't do that, we can't move forward. I just want to talk on the markets for 1 minute, because it's a fascinating dynamic going on in the US. We've hit new highs on in the S&P and in the markets on a fairly regular basis since the Fed announced they were going to cut rates, and they did their 50 basis point cut. Ironically, during that time, yields have backed up about 50 basis points, almost 60 basis points, and we've continued to press forward. That is not necessarily a healthy move. While yields moving up is a sign of a strong economy, I think there's a mismatch right now. I would argue that it's a time to be a little bit cautious. We think the US and the markets will continue to move up. I think the global economy is going to have a bit of a fit and start around the election. I would be very comfortable seeing more volatility into the election and after, but the signs are actually quite positive for the underlying strength of the US economy. I think we continue to attract capital from the rest of the world, which I think is a problem for the rest of the world right now. You're seeing that with some of the weakness in Europe. You're seeing that in some of the challenges with China. I think the debt problem is real. Keep an eye on interest rates. The Fed can't move as aggressively as I think the markets would like right now because of the strength of the economy. And that means the other economies can't move as aggressively as they would like, or they'll devalue their currencies too much. So it's a balancing act that you have to keep an eye on right now. So I think it's going to be sloppy into the end of the year, but trending up after the election. So Mark, I'll stop there and open it up.
Thank you, sir. Anyone agree, disagree, have questions?
It'll be really interesting to see what their growth number is. I think it's going to be around the 3%, but they'll say, is it moving up or down a little bit? They usually move it like a tenth or two from their April projections. It'll be interesting to see what that projection is, as well as their inflation number.
I think we're all waiting for the elections in America at this point. That will be a big, indicator of uncertainty, of course.
It's interesting. Larry Fink was at yesterday saying that the markets are putting way too much emphasis on the election and it doesn't really matter, which I find interesting because the policies, he must not think any of the policies that they're talking about are going to get put through, because to me, if either one puts through all their policies, it would be pretty bad.
I agree with Stephen that money eventually go back to the U.S. market. Singapore is perhaps seen as a financial hub, and then I think post the COVID or around that time, you see capitals going out from China is coming here. but soon they realize that Southeast Asia is probably there's not too many deals for them. And then what it eventually is this many of them that go to the US or some of them go back to China. It's probably for the few rich people to settle down here. But eventually, if you want to invest here, it's probably less opportunities. So totally agree. It's a long term where there is a market, where there is technologies, and there is opportunities that is still probably now, given the uncertainties in China, that's probably now the US is driving this. So the more capital probably will not really say, hey, you cut an interest rate, it will go into emerging market. So yeah, I agree with Steve.
There's one other thing I'd keep an eye on in Asia is China and Japanese yields. Their benchmark yields are getting very close to crossing each other, which I don't know what that says, but you have two economies that are not particularly screaming strength right now. And but we have to keep an eye on that because that gets to the Japanification of China discussion, I think, as well.
You know, one of the things that bothers me about the IMF is that I've rarely see a report out of the IMF that's optimistic. They tend to have the sky is falling and it's always sort of a scarcity mentality for them. And I ascribe more to sort of John Cochrane, the Hoover Institute, who would say that most of these problems are manageable in as long as we focus on sort of deregulation and growth. And as we were talking last meeting, Stephen, we were saying that Lardy came out and said that basically he thinks China could grow by 8% per annum if they were to go through a deregulation cycle. And I think that's sort of the same thing that we saw with the U.S. economy and some of the productivity gains and the growth in the U.S. economy, that I think most of these problems can be, I should almost say, swept under the rug with growth.
I think you're right on the lack of optimism out of the IMF. But if you think about it, the IMF is dealing with countries that continually default on their debt because of what you just said and because of the corruption. So it's kind of hard to be optimistic if you keep giving out loans and they keep having to be reset, right? Because I think that's part of the problem is systemic I think the IMF's past its time. So I think we have to update all the governing systems. But
so who takes the haircut if Nigeria defaults? I mean, so in the sense of where's the market going to settle and whose nickels are going to get lost?
The contributors to the IMF, right? Loans. So
yeah, and I just wonder in sort of the grand scheme of things whether or not it's meaningful or not. If I don't know, it's hard to judge so many of these different countries that are out there because there's just even if you go to the African continent, you look at Kenya and Nigeria, they're close together, but they're two completely different environments.
Yeah, I think the way I use the IMF information is directional, and is it more of the systemic, highlighting systemic issues that are existing in the system. Every time I read it, I think of we have a highly bifurcated world, and haves and have-nots are real every day.
Emerging market debt funds right now are really not yielding. They're not pricing in the level of defaults that IMF report as was presented would project.
Yeah, I think they just think that we just keep adding on debt, so that you don't default on it, you just re-up it and add on to it, and we kind of pretend that it's not real.
Yeah,
And that's where the bill's got to come due at some point. They just keep re-rolling the debt for a lot of these countries.
yeah, and then sort of inflating our way out of it, right? So the governments will inflate their way out of it, print money, QE, quantitative easing. They've come up with all these shenanigans to kick the can.
And we have no normal economic cycles as a result.
And so where's the safe haven? I saw the gold hit a new high.
Gold hit a new high for, I think, two reasons. One, that safe haven view, and two is the BRICS are trying very hard to move off the dollar as much as they can or protect themselves from future sanctions. And they tend to do this in times of conflict as well. But there's been a big push from the BRIC nations to increase their gold holdings to reduce the dollar exposure.
Just a quick question to follow up on what we were talking about earlier on the IMF. So, sort of the Silk Road was kind of very expensive vendor financing. I mean, what does China do when they have the IMF problem around a lot of these economies? I mean, do they go out and sort of repossess ports and infrastructure?
Francis, I believe yes is the answer to that. What's your take? They're the lender, they own the asset, right?
Well, so far, what's very interesting about a lot of these sort of the T's and C's are not publicly available. So we don't actually know the terms and conditions of a lot of these Belt and Road loans. And I think the conversion of the debt to equity or any type of taking of control of these assets is very, very complicated. So if we take a look at what happened in the Maldives, the Indians came in and pumped in some money so that the Chinese could not take over the port. And I think the same thing happened in Sri Lanka, where the debt went bad, but the Chinese have been very, very quiet about what's actually happened to that port in Sri Lanka. So I think that the US and Europeans would probably do whatever they could to show how evil China is in that sort of vendor financing, or the expensive loans that they've given, and not allow China to take control of those assets. So I think in very few instances will China get control of these assets, and they may be forced to be more forthright in what's in the T's and C's as well.
Okay.
Yeah, I think this. There's a perception that China is all powerful in this situation, and I think that the smaller nations are realizing that they have a lot more power than it may seem.
In the words of Mark Lazary, control is an illusion.
Yeah, I do want to mention that China and India has been are two of our biggest investors here, and the former prime minister did well. She may have done a lot of bad things, but she did manage to somehow balance the two, and I guess you could say keep almost both of them happy. Although the last trip to China was cut short by one day. Apparently she went for some kind of deal that didn't come through, and she just got upset and came back home. So it was kind of
This is in Bangladesh.
Absolutely, yes.
Okay.
It has been.
So has there been any debt? Has there been any debt in Bangladesh that's turned bad and
I mean, not yet.
Situation?
Not yet.
Not yet. Okay.
Not yet. I mean, we did. I think today a report came out that we serviced about $1.5 billion worth of debt. Just, I guess you could say, in the last 1 week or something like that.
Yeah, and then in Pakistan they had something where there were some debt problems, and then the Pakistanis responded by blowing up a bunch of Chinese people. If I remember that was last week, right?
Yeah, man, it happens here as well. It's just because the previous government had a very strong control on the media. Most, unless project owners and everything, it didn't get out.
Okay.
So, yeah.
Okay. But it was reported in China that a few engineers were killed, and it was related to a mining project.
Yeah.
Hmm.
So you can collect the debt, but you can also collect the bodies of your citizens at the same time.
Yeah, it is sad.
I see. I just wonder, do we end up, does China's Belt and Road end up with the same PR that the US's efforts in around the world have brought us, which is not great PR and not
Yeah.
great relations longer term. We're all here to help, and then people find out just how much help we offer. I think that's going to be the issue for them as well as it was for us.
I think
Well, I think
mostly they'll just reschedule the loan. All right, make it longer, make it smaller, so it's more, because like I said, right now Bangladesh is in a very, very bad spot. So they might just there's the new government comes in, whether or not China will agree or even India will agree. That's we have to see that. All right, but yeah, let's see. Fingers crossed.
I think this vendor financing idea, if you go to a bank, you get a loan, they'll do risk assessment. But you see that what China's doing is that probably a lack of that is given much bigger package than what the risks probably really are. Then you end up with a lot more in this scenario than what we described and discussed just now. I think it's probably some financial pressures. Unemployment rate now higher in China. I think it's now stopped doing that aggressively.
It's been mostly unsuccessful in terms of creating soft power for China. Yeah, it's really created more enemies than friends.
Francis, how much of that do you think is that their economic model is weak right now as well? Because part of the China story was be like us, and you can get this kind of growth, and you'll get all these benefits. Do people see that the China dream is not necessarily continuing the way everyone thought?
Well, I would say two things about that. I think that the China nightmare of the COVID response as a long that's long COVID for China in a lot of ways, is that it's really shown the ugly side of authoritarianism and just how uncivilized it was. And the second thing is, I think the general returns on the projects have also been lower than expectations.
Good points. Capital always flows the highest rate of return. Just so if they're not getting it there, they're going to go to someplace else.
Well, speaking of capital movement, I think it was like 2018 when China started to lock down the capital movements. How's that playing out today, particularly vis-a-vis Singapore? As you were mentioning, Mark, are people able to like find the holes through Hong Kong to Singapore and back?
We still see that capital flooding, and then they find their ways, right? But I think the two trends. One is that the processing fees is higher. Does someone do this work, they will charge more. And the second is that now, because they're a group of hawking people that doing money laundering and be caught by police. This is in the Singapore top line for almost 1 week and be caught for billions of dollars money laundering. So now the banks here are be more strict, especially for those with the Chinese passport. Or they sometimes they bought a passport of a Eastern European country or other country, and then they come to Singapore. These also got high denial rate of opening a bank account. So I think capital now moving out to Singapore is becoming more challenging. Not only the Chinese government is restricting, but also Singapore, the local government banks are putting more restrictions and checking that the process is being more lengthy and more strict.
So you have price gouging on processing fees for getting money out of the country.
Yeah, as high as 15 to 20%.
Is that what it is, Francis?
Wow.
Yeah.
What was the jump? What did it jump from?
I would say 5%, 5-6%.
Pamela would be all over that. Price gouging, anti-price gouging efforts. That's
Well, you're still
fascinating.
paying the same party. It's just like corruption has just become more expensive. That's what the anti-corruption drive has really accomplished.
Yeah.
And change the pockets, right?
No, it's pretty much the same pockets. It's just more expensive.
Jesus. It's quite a setup we got, Mark.
The last time Francis asked you to come at 11, you're welcome again. I know you don't have to. I'm not going to twist your arm, but then I don't think we did a reminder on this one as well as we could or should have. But in any event, we learn a lot together, and I faced criticism for those in Melbourne. Said it's too late. I have to do this at 6 a.m. But I have to push somebody. I have to push. Not Chris Mayo. He gets up at 5 a.m.
I'm going to do that every 2 weeks.
I think this is a fair time because actually we're going to do daylight savings time in the US and not here. So you can shift it 1 more hour without making a difference for us in Asia. At least for us in China.
Right. Fair enough. But
I'm
isn't
not sure
that
about-
Asia, Francis? Isn't China Asia?
Not as far as I'm concerned, but yes,
Right.
if anyone's listening, yes.
Isn't it the other way around in China, though? Isn't China Asia? Isn't that what President Xi would think? I never can keep it straight.
Yeah. Well,
Well,
Stephen, maybe we should have a conversation about how we might be able to coordinate on sharing some information in upcoming 8 a.m.
yeah,
call.
in 2 weeks.
Yeah.
Plus, we could put a panel together for other people to get some perspectives.
Okay. Yeah.
Sounds good, Francis. Thank you.
This way you can pick on someone else instead of me picking on you.
I don't mind.